From Storyflow listener sends, the $7 billion Bitcoin yield almost nobody is collecting yet.
May 12, 2026 read online.
The $7 billion Bitcoin yield almost nobody is collecting yet before the consensus catches up.
10x market update. Bitcoin treasury companies have been sustained by retail exuberance, a bid that has been conspicuously absent in recent months.
Hedge funds face the same dependency, the market-neutral basis trade, which offered roughly 8% per annum by going long spot Bitcoin against short futures, relied on the same speculative premium to exist.
Both opportunities have effectively closed. Bitcoin funding rate the yield hedge funds used to be able to generate.
What remains is a framework-driven approach, as we explain below, to generate yield from the $1 trillion sitting idle in holders' wallets, which has shown reliable 7% outperformance over a simple Bitcoin buy and hold strategy.
Theoretically, that is an annual $70 billion opportunity. Realistically, even
capturing 10% of the addressable market would generate $7 billion in annual yield on capital currently sitting entirely idle. A $1 million position in Bitcoin held passively since April 2020 would have grown to $11.90 million over 6 years, a 51% annualized return that few other asset classes could match. The same position, run through the more conservative single-leg strategy, would have grown to $15.60 million, an additional $3.80 million, or roughly 48 Bitcoin at current prices. The full two-leg framework would have done better still. The edge does not come from being more active. It comes from being selective. In 75% of months, the conditions are not met, and the strategy does nothing. It simply holds Bitcoin.
The outperformance is generated in the remaining 25%.
That 7% annualized outperformance compares favorably to most staking yields available elsewhere in crypto, and unlike staking, it requires no protocol risk, no lockups, and no exposure to token inflation. It is a yield on the asset traders already hold in the currency they already want.
The framework is relevant to wealth and asset managers and to active traders who are structurally long Bitcoin.
And for Bitcoin treasury companies, which have largely operated as passive accumulators dependent on retail-driven premium, it offers a path to behaving more like asset managers, generating yield through process rather than waiting for exuberance to return.
Market updates. Become a paying subscriber of Market Updates to get access to this post and other subscriber-only content.
Upgrade important trading alerts and risk factor analysis.
Actionable market analysis
that saves you hours.
Covers on-chain data, macro trends, market structure, flows, catalysts, and more. Focused on Bitcoin and top crypto assets. Get 2-5 reports per week. No more, doubt less.
Turning market insights into confident action. Update your email preferences or unsubscribe here. Copyright 2026 10x Research Limited, 160 Robinson Road, Hash 1404 SBS Centre, Singapore, Singapore 068914, Singapore Terms of Service.